Good morning, good afternoon, or good evening, depending on where you might be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Director of Communications. Global Blockchain Business Council, also known as GBBC. It's my pleasure to welcome you today to the GBBC's Post-Trade Distributed Ledger Group webinar on the road to central bank digital currencies. So by way of brief background, the GBBC is the leading global industry association for the blockchain technology ecosystem, with more than 350 institutional members across the globe. And the PTDL Group is an initiative of the GBBC, which is made up of more than 80 financial, legal, and academic firms in the GBBC's membership, who host monthly closed-door meetings to discuss DLT and blockchain applications and regulatory developments in financial services. And the PTDL Group also occasionally hosts open access webinars such as these with industry leaders. So today we're honored to have brought together leading figures in the world of central bank digital currencies to discuss the latest developments, key opportunities, their works, and also the challenges that lie ahead. So this webinar is also a follow-up to a conversation we hosted in June with BTG Pactual, Brazil Central Bank, Accenture, and Citibank, which is available on our website. And so we're really looking forward to this conversation to discuss adoption. So thank you so much to Simon Chantry, co-founder and CIO of Bitt, Ashley Lannquist, former project lead for blockchain and digital currency at the World Economic Forum, Alan Lim, head of the FinTech Infrastructure Office at the Monetary Authority of Singapore, and Wee Kito, advisor to the BIS Innovation Hub, for joining us today. Also, thank you to our moderator, Donna Parisi. She's head of finance, financial services, and FinTech at Shearman and Sterling. Before I hand it over to Donna, I would just like to remind, for those of you joining us live today, you can submit questions in the Q&A box at the bottom of your Zoom screen, and we'll take them as able. So thanks again to our speakers, and thank you, Donna. I'll hand things over to you.
Thanks, Sophia. Really excited to be here this evening. I'm located on the East Coast of the United States, and to be leading this discussion on CBDCs with a very distinguished panel. So I'm going to kick off this webinar by asking each of our panelists to briefly introduce themselves and talk about their work with CBDCs. So Simon?
Hi, Donna, and thank you for having me this evening. So Simon Chantry here. I'm co-founder and CIO of Bitt. Bitt was the first to digitize a national currency on a public chain back in 2015 with the digital Barbados dollar. We've since gone on to work with a number of central banks around the globe, including the Eastern Caribbean Central Bank, which I believe was the second CBDC to launch in the world. And more recently, we're known for our work with the Central Bank of Nigeria, digitizing the Naira on the eNaira project.
Thank you. Wiki?
Hi, this is Vicky from the BIS Innovation Hub Singapore Center. So I'm working on Project Damba, which is a multi-CBDC project involving central banks from Australia, Malaysia, Singapore, and South Africa. So this is really a project looking at how we can actually have central banks issue multiple CBDCs on a common platform and have it made available for use by multiple commercial banks. I'll probably share more about the project later on in the conversation. Thank you.
Thank you. Ashley?
Thanks for having me. Very nice to speak with you all tonight. I used to be the project lead for blockchain and digital currency at World Economic Forum, also leading all of the forum's work and publications on CBDC for the past 3.5 years. And that was my role when we started putting together this panel. But I'm in between roles right now. So I'm no longer working there as of last week, and I'm joining the IMF's CBDC efforts starting next week. So there I'll be focused on providing advisory and conducting other research related to CBDC technology and policy for central banks.
Congratulations on your new move, Ashley. Alan, last but not least.
Hey, hi everyone. My name is Alan. So I head up the FinTech Infrastructure Office for the Monetary Authority of Singapore, and really looking at innovation, technology, innovation, and financial sector, different strategies and programs for that. Specifically, in recent years, really looking at the infrastructure that's required to support the future of financial services. So been looking deeply at CBDCs, especially on the wholesale space. And more recently, we've started efforts to look at the retail CBDC side of things as well. So look forward to having this conversation with all of you.
Thank you. So just a few words of background on me. So I'm Donna Parisi. I'm a partner at Shearman & Sterling. I head FinTech Financial Services at the firm. Been very involved in the crypto world, including CBDCs. And I'm really excited to dive into the questions here today. So I'm going to start with two very open-ended questions. So for starters, what are some of the main factors driving user adoption of digital payment services such as CBDCs? What are the future and current needs of global citizens in this regard? And how might these factors differ by jurisdiction, right? So we've got Singapore represented, the US, but these are global phenomena. So how does a jurisdiction affect the analysis? And also retail versus wholesale. Alan mentioned that in his introduction. Maybe explain a little bit the differences and what drives each type of CBDC. So that's a lot, right, to kick it off, and we're going to spend some time talking about all that, but I'm going to ask Ashley if she can maybe give her initial thoughts and then ask the other panelists to jump in.
Yes, so for starters, we can say that we don't know exactly how adopted CBDC is going to be. And there are some surveys that have been conducted by different regions. And I'll share some of those stats, but it seems to vary a lot. Generally, developed economies may have lower initial adoption than developing. But yeah, just first disclaimer that adoption is actually a risk and a challenge, particularly it seems among the developed economies. So it's not guaranteed and varies a lot by countries. But regardless of the country and regardless of the degree of adoption, some of the factors that need to be technically present in the CBDC are that it's very cheap or free to use. It's highly accessible in terms of meeting users where they are of the devices and connectivity that they have, very clear user interface and experience, that there's a degree of privacy necessary for the preferences of that region, that the users deem it trustworthy and they have confidence in the technical operation and technical resilience. So that's the baseline. And these are factors that can drive adoption. In terms of varying by region, it seems that consumers in countries that perhaps are more developing and don't rely on legacy systems as much might be more ready to embrace and adopt digital innovations. That could be some explanation for why some survey data that I'm looking at from China says that 99% of citizens surveyed would be interested in using CBDC, and Brazil 93%, whereas US 73% and Germany 77%. And that's from PayPal research. I'll put in the link. And then the Netherlands also released survey work for earlier this year that found about 50% of the population interested. So there's a wide range of interest and different purposes, and of course, very different goals for why the CBDC is issued in each of those economies. That's for more discussion. I'll pause there.
Anyone want to react to that? Otherwise,
No,
I'll ask. Go ahead.
Yeah, I think Ashley touched on some great points. Look, one of the practical points that I like to point out, I think, is given that CBDC networks are meant to be a public monetary infrastructure, like a platform for payment service providers to build into and then in turn offer financial services to the general public, you can consider that basically the cost structures associated with processing transactions, settling transactions, maintaining user balances, these are all effectively outsourced to the central bank in a CBDC scenario. And the payment service providers then become responsible mainly for customer support, application development, and providing value-added services, payment services via applications to the general public. So it kind of, it removes some cost structure for running a payments business. It also makes it easier, arguably, to integrate payments functionality, CBDC denominated payments functionality into existing applications, whether it's social media applications or other highly trafficked messaging applications, for example. And so I think that's also going to have an impact around adoption, is the extent to which we see, I guess, some of the benefits of that removal of the cost structure. Now, again, it depends on the business model, which is an entirely different subject, and central banks are still considering how to monetize these networks and whether or how to subsidize these networks. But I do find that that's an interesting element of it, where you're basically removing a large part of the cost structure for payment service providers to turn around and offer these services in market.
So Alan, maybe this is a good time to talk a little bit about the different motivations behind a wholesale CBDC and a retail CBDC. Would you mind addressing that point?
Yeah, so I think, and maybe just a lead on from the previous conversation, I think it's important to understand which perspective we're coming at when we're looking at CBDC, because I think the answer is going to be very different, because there's obviously very different vantage point and very different perspective, whether you are a commercial bank versus, let's say, a retail consumer on the street, or somebody is looking to issue a CBDC. So I guess just to kind of frame, I guess the whole landscape of CBDC, if we split up to wholesale and retail, just as a context for our discussion. Wholesale CBDC is really restricted to the use, I guess, within the banking system. And it's akin to the reserves that commercial banks place with the central bank today. Whereas the retail CBDCs is immediately accessible to the general public, in the sense that the digital equivalent of today's notes and coins, a digital form of that we are all familiar with. So I think it's important to kind of look at retail CBDC and wholesale CBDC and understand what the different use cases are, because it's conceivable that a central bank might choose to go with one and not both, or both, right? So be good to kind of unpack some of these different characteristics of each of these types of CBDCs.
Thank you. So Wiki, you've listened to the introductory comments of the rest of the panel. What's your reaction?
Well, the way which I see about look at adoption of CBDCs, I would say that ultimately it's about whether it solves a pain point. As with any technology used, it's always about, does it solve a challenge that we have today? Does it meet the user's need? So, when Ashley was quoting some of the stats, I was thinking about, just looking at the differences in the different numbers, you will see that many of the developed economies, the interest in having a CBDC is much lower, because they do already have very strong mobile payments usage. So for example, if you look at Singapore, where both Alan and myself are based in, we can already make retail payments to each other in using our mobile phone numbers in less than 3 clicks. So when you look at a situation like that, advantages of CBDCs are not so clear. So that's really on the retail end. But once we start looking at the other perspectives, so for example, cross-border perspective, or also specifically in the wholesale area, then you start to see that cross-border payments are still expensive today. So there's possibly quite a good use case over here. So I would say that ultimately it's really from a user perspective, does it solve their challenges, some of the pain points they're facing today? And then that ultimately determines whether they see any need in using CBDCs.
So Simon, you mentioned your work in Nigeria in the intro. Could you talk a little bit about the motivation behind Nigeria's eNaira, which is, I think, the first CBDC to be launched in Africa? Is that correct?
Yeah, that's correct. We're really excited to be working on that project. So that's basically what's in use there is Bitt's digital currency management system, which is a configurable system deployed by central banks for their particular region and beyond. Now, I think the motivations for Nigeria in particular are super interesting, especially given how advanced their payment system is, both from the underlying network perspective and the amount and sophistication of payment service providers that are present in that market. Nigeria does face a number of challenges pertaining to the currency in terms of controls, some inflation, and then they've also taken somewhat of a heavy hand in terms of crypto regulation. And so I think that the central bank sees the eNaira as a tool to assist them in a number of ways from a policy perspective to address those challenges. Now, I have some ideas about how that will be done, but I as you can imagine, they haven't shared the entirety of their plan with me. But I do know that is sort of, some of the thinking behind it is a CBDC at scale scale provides a central bank with an augmented monetary policy tool set. And one of the ones that I'm particularly excited about is to facilitate compliant crypto trade. I think that the very quick uptick in usage or increase in usage in Nigeria of digital currencies, of cryptocurrencies, I think probably came as somewhat of a startle to the regulators there. And so as we've seen around the world, different sorts of reactions to an increase in trade in this new asset class has resulted in a number of different reactions. And so if I were to I think and all of the sort of typical targets also apply, or I guess goals rather apply here as well, in terms of trying to reach communities that are somewhat disconnected and have continue to lower the cost of payments. But I think also those few sort of higher level challenges, I think they're looking for additional tools to address those challenges.
So it's interesting. I mean, those of you who follow regulation in the U.S., that there's been a spotlight on the use of stable coins, right, in terms of facilitating crypto trading. So what I hear you saying, Simon, that is in some way having a CBDC is going to give bank regulators some control over that crypto trading, and may in fact act as a stable coin in that regard. Which is fascinating.
And control and likely visibility as well for inflows and outflows. Like I wouldn't be surprised if we see a number of central banks move that way, particularly central banks who may have been standoffish about crypto initially. I think that especially as the market cap of this asset class continues to grow and the interest continues to be validated or solidified and the user base grows, I think they'll look for ways to enable compliant trading. And if you're using a CBDC as a base trade pair, you're going to get a lot of really valuable economic insight and probably a host of other benefits as well.
So Wiki, we talked about, there are challenges and opportunities when we're looking at a single country CBDC, but you mentioned in terms of use case, cross-border payments, which are still inefficient, very expensive, and use legacy technology. So how are we going to implement a cross-border CBDC? How are we going to link up the different CBDCs of the world once we get country specific?
Thanks, Donna. So this is one thing we have been seeing as well. So if you look at central banks doing experimental work on CBDCs, I believe the number is now more than 60%. These are the ones who are actively pursuing CBDC projects, actually doing some form of experimenting and prototyping. I think from our earlier experience, so from the experience of some of the earlier central banks like MES, a couple of other central banks as well, who have been doing domestic CBDC projects, they do eventually see that one of the strongest value is in cross-border payments. So the ability to make cross-border payments cheaper, faster, and safer. So that's why that growing interest in multi-CBDCs. Now, so the question is always like, what do we mean by multi-CBDCs? The intention is really, how do we allow multiple CBDCs to be used in an interoperable manner? So if you think about it, there's multiple ways that it can be done. So the BIS actually has a paper about multiple CBDC arrangements and the future of cross-border payments. That's a very interesting resource to really understand this, but I'll just briefly describe it. So the most basic model is really the idea of that, you make your CBDCs, domestic CBDCs, available for offshore usage. So the fact that, if I'm in Singapore, but I have the ability to hold, say, a digital, Canadian dollars or a digital South African rand, then that is the most basic ability for me to do that. So you have all of this disparate system, but having that ability to essentially hold on to all these digital currencies in different platforms. But that doesn't work very well from a interoperability perspective. So that's the next model which they were looking at is then, how do you link up all these different systems in a more bilateral manner? That would be border two. So I suppose some of the projects that has already explored this will include, say, Project Jasper and Project Ubin in the link up project that was done between MES and Bank of Canada a couple of years back. There's starting to be this growing interest in this idea of a common platform for multiple CBDCs. So essentially, this is what we describe as a model tree, where essentially you have a single platform where multiple central banks are all able to come together and issue their respective CBDCs on it. So once you have the ability to do so, then some of the benefits become really clear, because if let's say I'm a Singapore bank on this platform itself, I have the ability to hold on to multiple different currencies. I can then transact in foreign currencies with any other bank on the platform without the need for intermediaries. So today, when we look at cross-border payments, we always rely on correspondent banks. That tax on additional fee, requires additional time to do processing. And that essentially adds on to the cost and time of making cross-border payments. Now, if we are able to all transact directly with each other, then the cost and time required can go down significantly, and then essentially allowing for much more cheaper, faster, and safer cross-border payments. So I guess that's really the interest from central banks on moving beyond just domestic CBDCs towards multiple CBDCs for cross-border payments.
So let me ask you, how do you handicap whether or not we'll be successful in having this, one central platform? Is there consensus building around what that platform should look like and the technology, or what are the competing interests?
Wow, that is another interesting question. So I would say that there are definitely some challenges around how do we even bring multiple central banks onto a common platform? Now, you mentioned consensus. We actually see consensus in multiple different perspectives. There's the governance perspective. There's also the more technical perspective of how we usually use the term consensus. But if you think about it, the underlying question over here is, as central banks, you are typically responsible for a single platform. You are fully responsible for it in a domestic context. Now, once it comes to being a multiple central bank platform, who is the single party that is responsible? How do central banks even share a common platform? Because eventually now there isn't really a concept of a single owner or operator. It becomes like what we call a decentralized platform. So I guess then the governance perspective becomes really important. How do we build that trust and consensus among central banks to say, okay, this is what we agree to use. These are the basic functionality specifications that we agree to. And then this is how we actually build on this platform itself. There are, I would say that, projects like Project Damba, which is what I'm working at currently at BIS, is probably the first step in this process. And if you look at, the whole journey of central banks in working on CBDCs, it has went through like 5 or 6 years easily already. And I think we are just in the very first early stages of looking at a multi-CBDC platform, how we actually build that ability for central banks to come together.
So Alan, we've been talking a lot about central banks, right, and governments, but you mentioned in your opening remarks that one of the opportunities is for central banks and commercial banks to collaborate. What do you see in this regard?
Yeah, I think it's really important that any role of any new infrastructure, I think it needs to involve both the private as well as the public entities that involve, and really the wider ecosystem. I think that's key. If I would just kind of reflect back on this question on CBDC adoption and what's, I guess, undertaken by different jurisdictions around the world, I think there are different efforts ranging from some policy-related work, understanding and doing research in this area. There's some efforts led through international non-governmental organizations as well. The approach that we've been taking with the MAS and the community in Singapore is really to look at it from a practical experimentation perspective. So that's embodied through the efforts with Project Ubin, where it's a collaboration with not just central banks, across central banks, as Vicky has alluded to, but also domestically with the commercial banks that were really actively involved in the work streams. And if you look at the report that was out, it's a joint collaboration across the different parties. So aside from that practical experimentation and developing some of these prototypes, and through that understanding the risks, the opportunities, and really, really get your hands dirty and trying to understand what this all about, what's the fuss. The other approach that we've taken recently is the launch of the Global CBDC Challenge. So we had an opportunity to do that to, through that process, understand where are the possible retail CBDC solutions, understand what some of these solutions might be solving for. Yeah, we had a good opportunity of having good solutions that have come up that has helped to suggest, I guess, possible solutions to some of the problems that the different central banks are facing. On the policy side, we have also released, from a Singapore perspective, our current thinking on this front. So if anyone's interested in learning more about what we think at the moment on retail CBDC, we have a paper out there that just released a couple of weeks ago. So that goes into, I guess, our own analysis on the current landscape in Singapore, some of the options, what may be the motivations, and what are the reasons for maybe looking at the impact on the broader financial and monetary policy of a country. So yeah, I will be sharing the link, I guess, in the chat if there's anyone is interested in that.
So Alan, what's the posture of commercial banks? Are they eager to have a CBDC? Do they view it as a disruptor to their traditional business model and profits? What's been your experience?
I think that there's definitely I guess a sense of curiosity when something new gets introduced to the pond or to the equation. I think there is that sense of curiosity. But I think generally it's an opportunity, as some of the points that Wiki and others have made, in terms of driving cost efficiency. There is that sense that they will ultimately increase their profitability. On the retail side of things, of course, that's something that perhaps needs to be looked at more closely, the impact on existing bank deposits, etc. But I think there's also a potential for innovation as well, because new sets of services could be created if there is an existence of digital forms of money. So there is that sense of both innovation, there's a sense of what it means to the overall profitability and efficiency gains that could be achieved through CBDC. So I think we see different reactions depending on the nature of the project and perhaps the nature of the jurisdiction and where they respectively stand in terms of their market share and the kind of problems that they're solving for their customers.
Thank you.
Sorry, if I could just add on, I wanted to just bring out a few examples of commercial banks being involved in the CBDC space, because that gives a really interesting perspective. Now, at first we would think that, the large commercial banks who are doing a lot of cross-border payments today, who are taking on active roles as correspondent banks, they might actually be very reluctant I guess they would see CBDCs as competitors. But if you look at some of the largest of such banks today now, JP Morgan is working very actively on this project called Onyx, which looks at digital currency. They are also working with multiple central banks on different projects as well. And then even Citibank is also actively now pursuing this space. They're also a participant on the Global CBDC Challenge by MAS. So I do see that while banks probably, part of them sees it as competitive, they're also increasing interest by commercial banks to get involved in this area. And I guess be part of how, as business models changes, they are still a part of that whole process and being able to carve out a space for themselves.
Yeah, if I could just add on, because Wiki just reminded me. I think one tangible example is we've recently had the opportunity to work with Banque de France as well as JP Morgan on a project that's looking at liquidity management for in a multi-currency corridor. So again, that's an example of a commercial bank coming in and taking an active role, looking at it as not just embracing, I guess, the possibilities from an innovation perspective as well. So people just published on that space if anyone's interested as well.
Thank you. Yeah, I mean, Ashley sort of started off by saying it's an open question as to adoption, right, and timeline. And yeah, the commercial banks are hedging their bets because they certainly don't want to be left behind. So I'm going to shift gears.
And the audience can remember as well that deployment itself is a very open question, especially among developed economies.
So I'm going to shift gears now, and I'm going to ask Ashley to talk a little bit about the CBDC Policymaker Toolkit you developed when you were with WEF. But before I do that, I'm going to go to a question that one of the participants sent in, and it goes to sort of a key policy question, which is privacy. right? So what do you guys think about CBDCs in terms of government surveillance? Will it give participants, retail participants, the ability to control their data and control their financial destiny? Or will it just be a tool for enhanced government surveillance? Anyone want to take that?
Look, it's a great question and a concern that's top of mind. I think that the industry is eager for standards, for probably the appropriate bodies to step up and identify the risks and standards for the design of digital currencies so that they can preserve privacy and hold those that do have privileged access to data accountable for how they use that data. There's a number of different configurations and sort of technologies that can be used that limits the ability to query networks for transaction data, and certainly the separation of personal information from the underlying transaction network, I think, is probably core. Certainly that's what I've seen thus far, seems to be a given. But that doesn't mean that those with privileged access to data could link the two together for some sort of nefarious purpose. But again, I think it sort of depends on what region you're talking about. If you're in a liberal democracy, you expect certain rights for your citizens and your enterprises. And so again, I think I would just harken back to the need for standards and to ensure that those standards are turned into understandable technology configurations. And that's what we're working on at Bitt, as well as to satisfy those accountability and transparency requirements that I think most governments and their central banks are going to want, not only for themselves currently, but also to ensure sort of integrity into the future, because these are systems that could last for generations. And so we want to build them, with the expectation that future generations on an ongoing basis will be held accountable and will operate in the best interest of their economy and individuals and enterprises alike.
Thank you. So that's a great segue to Ashley to talk a little bit about her work on the CBDC Policymaker Toolkit. What's that, Ashley?
Thanks for the question. And I'm hesitant to add the link to the chat because everyone already has so much reading piling up. But this is a publication that was released at Davos in January 2020, and I led the report, and it's being employed by a dozen or two or more central banks. And what it does is it's a step-by-step model for them to evaluate whether CBDC makes sense for them. So it starts off with a landscape mapping for them to understand, okay, laying out what are the conditions to my country, geographically, politically, economically, and what are the key problems on the economic and payment side that our economy has. And then what they do from there is they determine, are any of these problems something that they think CBDC could address, which itself is a complicated question. And if so, what? So they identify the policy goal or challenge that CBDC can address, and then they can score it actually on how serious and important that challenge is to the economy and how feasible and viable it is that CBDC would address it, and then looking at alternatives. So what's the best alternative out there? Usually something with regulation or encouraging market competition. And can that do a better job? So actually I was speaking with multiple central banks in the past, and we go through this exercise, and by the end of it, it's determined that actually there are some other policy or market-based tools for improving financial inclusion or payment system efficiency rather than a CBDC deployment, which is a very intense intervention and costly and can have risks. So anyways, this toolkit, you can Google it, and it has multiple steps for considering whether to issue a CBDC. And it starts with what I mentioned of the problem statement, matching the problem to the solution. And only once you determine that CBDC could be the best solution, do you then look at all the risks that are involved in a CBDC, which I believe, Donna, you were asking about or yet to ask about. And those right off the bat can include things we've already covered, like low adoption and wasted effort and wasted money, and if there's not very good adoption, or reputational risk for the central bank, but then also a set of technical and financial risks. So on the financial risk side, we have disintermediation, which is the CBDC attracts too many deposits away from commercial banks, as we were just talking about a bit. digital runs that are a risk-off event in the economy, moves people to flee rapidly from their deposits to the CBDC, or even if the proper risk controls aren't in place, that the CBDC becomes a platform for illicit activity to occur. And there's a lot of smart people thinking about design and technical and economic incentives and requirements to control all of these risks. On the technical side, we have cyber attack, data breach risks, users with privileged access to the system, malevolently freezing or withdrawing the funds from it. We can have, depending on the technical design, some complications related to double spending of the CBDC or interrupting the monetary sovereignty of the central bank. If, for instance, we have a distributed system where multiple nodes can have some powers over the CBDC and they make decisions about validating transactions that would be different than what the central bank would make. It's a whole set of issues at stake. And then looking even further into the future, we have quantum computing looming on the horizon. And we know that it will likely break a lot of the encryption techniques and primitives used today that are likely to be used in CBDC related to public and private keys. So a lot of the central banks are being are starting to look at that and embedding quantum proof cryptography into their CBDC, or at least allowing for some flexibility and agility of the primitives that they use to upgrade and change them out in the future if possible. So there's a lot of issues at stake here.
A lot going on.
And that underscores the points I was making earlier about how you really need to have a clear value proposition to undertake this. It's always good to explore and research and follow. You can do that as long as you want, but to actually implement, these need to be seriously considered, and also that it's not a clear case in a lot of developed economies.
All right, so Alan, you've mentioned a couple of times now the Monetary Authority's Global CBDC Challenge. What is this? What's the challenge? How does it work? What are the problems you're seeking to address, and who are the participants?
Well, first thing first, while we launched the challenge, it was really in partnership with an international group of participants. I won't name all of them, but just to highlight that the IMF, the World Bank, and a number of central banks have been very supportive in terms of contributing their feedback in terms of possible problem statements. They helped in the judging of this competition. But the core essence of the CBDC challenge, what we have done is to identify, I guess, the common policy questions that central bankers might have before they issue out the CBDC within their respective jurisdictions. So some of the, I guess, the design tension and the trade-offs distilled across child problem statements in 3 themes, ranging from CBDC as an instrument, from a distribution of CBDC, and from a core infrastructure perspective. So just to give some examples of that, that could involve, for example, the trade-off between decentralization versus accountability, the trade-off between some level of transparency versus privacy, and how do you kind of manage that tension, and also things like offline access and being inclusive to individuals, even as we look at rich functionalities without, in some cases, populations where they may not necessarily have access to smartphones. So really looking at the possibilities there. So we had about 300 submissions and across 50 countries, and we had the chance to look at 15 finalists in greater detail. We had the demo day about a few weeks ago, and it's available on YouTube if anyone's interested. But what we have seen through that is the process is to look at the possibilities and not just reading the, I guess, text in some of the material that's out there, but visually, I guess, see for yourself what the possibilities, what might a wallet that has CBDC look like, how might payments look like in this case, how might a central bank conduct their monetary policy in this setting. So that's really the purpose. And post that challenge, what we hope to do is to share some of the findings through that challenge. And from an MAS perspective, we'll be taking the rich learning that we have from the challenge as we build forward the ongoing additional research, I guess, into this space, looking at the technology infrastructure that will be required if and when we decide to issue a retail CBDC in Singapore. So that's, I guess, what we've been working on and what we'll be looking to do in the months to come.
Well, we look forward to getting the benefit of the learning. So Simon, you've actually been involved in implementation, right? You mentioned a couple of currencies. We talked about Nigeria. You've mentioned some countries in the Caribbean. So in your experience, what are the main challenges, both in terms of designing a CBDC and then also implementing a CBDC?
Yeah, that's a great question. So we designed, like at Bitt, we've designed our digital currency management system to be able to meet what we consider to be sort of features that a central bank of any size are going to require. And then you can picture, as we move from country to country, we configure the system to meet the specific needs of the economy and the financial system. I think naturally one of the challenges is the integrations with the domestic payment systems and payments service providers. So, you know, and also other infrastructure like digital identity systems, for example. So there's going to be unique integrations on a country by country basis that you know pose different challenges, and you know, the more we do it, the better we get at it. And so we're certainly improving in the digital, and you know, our DCMS is continuing to evolve. I think, you know, to be honest, I think one of the biggest challenges perhaps is maybe less technical and more from a management perspective, and that is, this is the first time in a central bank's history that they've engaged enterprises and retail consumers in a more direct way. Even if there are intermediaries in between them and the enterprises and retail consumers providing the payment services or the payment applications, it's still an underlying network that sort of touches more areas of the economy via software. And so I think one of the things that we've seen is central banks, you know, get into these projects and then realize, oh wow, it also affects you know, this element of our operation and this element of the economy and this part of the financial system. And so it's to say that technology is just one portion of these projects. They're really multifaceted. There's change management, there's legalities and legislation, there's operational challenges, and you know, a lot of other. They are multifaceted projects that we that you know, need to be considered from many different angles. So I would say that's a large challenge from the implementation perspective.
So Ashley, you're a member of the Bank of England CBDC Technology Forum. So you've been thinking about designing CBDCs and some of the challenges. What are some of the primary topics that the Bank of England Tech Forum's been focused on?
Thanks. And we have our second meeting next week. And this is a forum where a lot of private and NGO, private sector and experts from NGOs provide their expertise to the Bank of England to consider as the bank strategizes on whether it will issue a CBDC and the technical design for it. I'm on the technical side of the conversation. So some of the conversations that come up from either raised by the Bank of England or from the members themselves, these are all what's public in the minutes already, are the notion and questions around offline payments, which there was a good question about in the chat that I replied to. That's a growing theme that I'm seeing.
What is an offline payment?
So sending CBDC to a business or another person when one or both of you don't have internet access, but maybe it could also mean you don't have electricity access as well, yet to be perfectly defined. There could be there's heightened risk of fraud in that context because you have fewer controls and checks on the account sending the money. Issues around privacy, around programmability, around dependencies of the private payment interface providers. So in CBDC, it's come up on this panel, we can have the banks and payment providers plugged into the system and distribute and custody CBDC on behalf of the citizens, perform KYC, even not all of that has to be taken on by the central bank, but that increases some vulnerabilities and dependencies on those players. And one of the reasons for issuing CBDC in the first place could be to reduce dependency on the private sector for payments. So just interesting questions around that, around processes for updates and changes to CBDC technology once it's launched so that it can remain agile and keep up with updated regulatory guidelines, as well as technical threats and realities, such as the quantum one I was mentioning. And a lot of topics related to interoperability of CBDC with other pre-existing legacy and new cutting edge payment systems and providers. And yeah, also as a general principle, the Bank of England has clearly stated related to these interdependencies and flexibility that its core CBDC ledger or record book, whether it be blockchain-based or not blockchain-based, should be kept as simple as possible. And really just executing its requirements and then allowing the more complex functions and operations and requirements in overlay or secondary services, like the cryptography that I was mentioning, so that it can be more adaptable. So that's one design preference for the bank.
So, Wiki, I'm going to go back to you on some of the monetary and policy implications, right? So sitting in the US, right, there's a debate between innovation and competitiveness, and everybody's worried about the digital yuan, right? And China getting ahead of the US, and I'm assuming that the UK probably has similar sentiments as well. So can you talk a little bit about this idea of innovation, competitiveness, its impact on reserve currencies, and what the first successful CBDC might mean to the world economy? Big question, I know.
Yeah, it's a very big question. So we probably need to break it down into, I guess, smaller questions and try to answer them. So I guess the worry is always that, you know, if there is a superior payment instrument, monetary instrument, essentially any digital currency that works better than your local currency, then there's always the worry about what do you call it? Currency substitution. So for example, maybe one of let's say, for example, a smaller country that is doing a lot of trade with a larger country, there's a possibility that because a lot of its exporters are using this other currency as well, they might start using that currency within the country itself. So then it becomes a concern of monetary sovereignty, because, you know, if within your domestic region you start to use a lot of external currencies, then the question is, you lose control of monetary policy. That's probably one of the biggest concern from some of these economies today. And then, of course, there's also a perspective that I guess, you know, we always have this term of dollarization today, where, you know, some of the smaller countries, probably within the region, you could think of countries like Cambodia, and I'm sure within South America, there's probably quite a couple of countries that uses a lot of US dollar for transaction today. But when they use US dollar, it's still in a physical form. Velocity of the money is probably not as high, because ultimately it's still a physical cash. The concern is really, if this is in a digital form, could that I guess utilization increase so significantly that it just overtakes the local currency altogether? That's one of the fear. The other fear is really about the issue of the currency as well. I mean, with a physical cash, once it's in your hands, you can't have it seized by any government suddenly. I mean, if they want to seize it, it has to be physical. But once it is in the digital form, then there's always concerns about what if the system is suddenly shut down? What if you are locked out of using the system altogether? I guess that's also why when we talk about some of these platforms, we always look at it as whether it could be somewhat decentralized, so that, you know, at least you always have a certainty that if you hold on to some of this digital currency, you always have the ability to use it. So these are all questions that I guess, you know, economies are probably thinking very deeply about. If there is a digital currency from a third country, what is its impact on us if we allow it to circulate within our country? So I guess some of these big questions out there that economies are thinking about.
Thank you. All right, so we have about 10 minutes left. I'm going to go to the Q&A and ask actually one of the questions that was in there because it was really important. And essentially it boils down to, you know, how can CBDCs be used in a country's social programs, right? So how can we link the role of CBDC? We used the word financial inclusion a few times during this webinar so far, but what are the opportunities when it comes to CBDCs and implementing social programs in a country?
Yes, so this is one of the goals that a central bank could have for CBDC, but I have to say it's not compelling because the advantages relative to distributing stimulus payments, checks, relief payments, and other fiscal transfers to households and firms compared to doing that with commercial banks or other financial accounts that exist in the country aren't very clear. In both cases, the challenge is that you want everyone to have those accounts, and thus you can reach all the households with those accounts, whether CBDC or not. Of course, operationally, it's probably easier for the central bank to just directly do it through the CBDC than multiple different payment, you know, or wallet and banking endpoints. But yeah, that challenge of getting all the households connected and using an account to thus pay them is really hard because people might not want to adopt it. Maybe if they're offered checks, they would, but also for financial, for barriers to inclusion that could exist. And then it gets complicated. If a lot of people do have those accounts, we start to see that disintermediation risk for commercial banks, where now a lot of these people have accounts and they're not holding deposits in commercial banks, but we could just set some caps and limits on how much they can actually hold in those CBDC accounts to not draw too much from the commercial banks.
So Simon raised this in the response to one of the questions, which is digital identity. How intertwined is digital identity to a successful CBDC?
It seems to be the case that the national digital identity programs will make it a lot easier to get CBDC used in the economy, or other.
Which countries are leading the way in terms of a national digital identity?
You know, I'm not. Maybe there's people with more expertise on the panel than this, but we have India, although I think there might have been some security problems with Aadhaar. So many other countries, everyone has a citizen ID number, not in the US, but that
I think Estonia, right? I listened
Estonia,
to
Denmark, Costa Rica, and then they can input that number to certify their identity. So that is a big leg up over the countries that don't have that program in place, where just having a digital identity is a big barrier for someone to open a financial account or a CBDC. But in any cases, central banks could try to improve financial inclusion. Also, private players could too, by having tiered know your customer requirements. So like, for instance, people who keep only up to $500 equivalent in their account or send up to $100 at a time don't need to present ID. Maybe they could just send their phone number or something like this. So that can help address it a bit.
Okay, with the 5 minutes we have remaining, I'm going to ask each of the panelists to sort of give their wrap-up thoughts, and embedded in that, sort of talk about how the technology community is contributing and can contribute to these efforts. So Simon, we started with you in the beginning, so we'll start with you as we wrap up.
Thanks, Donna. And yeah, I want to thank all of the panelists as well for sharing the panel this evening. This has been a pleasure. I guess I would sort of go back to one of the things, the points about privacy that I mentioned earlier in the panel. I think that that's where technologists and regulators and other standards bodies alike probably should be paying more attention. I think that there's an opportunity here to lay some very serious groundwork and what will likely be well-trafficked payment rails for the future. And I think ensuring that we're using the best solutions that are scalable but also protect user privacy and provide that accountability. I think that's extremely important. We're seeing a lot of great development at the transaction network level that I think anyone who's close enough recognizes that it will be like we will have distributed networks that can scale and have the sort of configurability that central banks require to include the existing payment service providers and to achieve the metrics that we're looking to achieve, as well as to be interoperable and for some of the benefits that we've seen in the research for cross-currency transfer via atomic swaps and whatnot. But when it comes to privacy, it's a really specific mix of technology solutions and policy. And I guess you could argue as well, organizational structure, right? And so that's where, and that's why, again, it's not just a technology issue. It's, it requires stakeholders from a variety of backgrounds and positions within organizations to come together to define these standards, test them, and then make them the standard. And what's interesting is digital identity actually plays quite an interesting role in this. When we think about some of the privacy preserving solutions at the transaction network level, you can think about zero knowledge proofs or transaction channels, multiple transaction channels for each payment service provider, sort of an M2N or end-to-end configuration. There's some great options for preserving privacy. But digital identity is actually a really interesting solution for handing back the individual sovereignty and transforming the way we think about identity. So that's a whole other rabbit hole I could go down. So Donna, I'll keep it short. But maybe to summarize, I would say the standards work is super important, and it involves all of us, technologists, policymakers, and more.
Thank you. Wiki, closing thoughts?
Thank you. So I think that, as a lot of different central banks start exploring all of these CBDC projects, I do think that it's very important that we work together and not in silos, not in isolation, because if not, we will end up building a lot of siloed systems that doesn't do well talking to each other. And I do think that a lot of the technology partners out there today are also making an effort in making sure that, central banks as well as all the different digital currency projects are moving in a common direction. So I'll just give some examples. I mean, R3 runs a CBDC sandbox program that involves quite a couple of central banks. It's a good way of central banks getting a good understanding of how this project runs. And then Hyperledger does a really good job of, driving towards standards, interoperability, working together with the World Economic Forum. And then there's also all these other technology company that has been, making available their APIs through programs such as the CBDC Challenge by MAS, including like Partior, MasterCard, a couple of all these different ways of just making sure that as we work on different projects, we are all working in a common direction. I think that's probably one of the most important thing today, to make sure that ultimately we don't end up in silos again as we build our different projects. Thank you.
Ashley?
One topic we haven't touched on is that if CBDC is available to foreign firms and citizens, the cross-border CBDC, it can create complications to the home country and that country. And so, there's a lot of talk about MCBDC and multilateral CBDC, bilateral arrangements, but there are cybercrime, financial crime, and economic repercussions that we didn't get into in this panel. So, for instance, the other country with the foreign firm citizen that have access to, let's say, a US CBDC, if there's a lot of inflation or volatility or challenges in that country, they could move into the CBDC, and that country could experience a capital flight and loss of deposits into the stronger currency. That's just one example. So wanted to raise that.
Great, thank you. Alan, why don't you wrap up the panel for us?
Yeah, so I think just reflecting on some of the points that my fellow panelists have raised, I think one thing that I think we should consider as well as we kind of whether it's implementing, rolling out CBDC solutions or investigating, I think it's important to look at the overall, I guess, end-to-end journey. Even if you're doing cross-border payments, how does it touches the last mile down to the end consumer? And in all intent and purposes, it's going to require, I think, a combination of different technology. Some may be blockchain-based, some will be relying on existing rails. So I think it's a massive problem that I think will require, I guess, collective inputs, suggestions across the different parties. So yeah, really look forward to I guess continuing this dialogue with everyone, pulling together the best brains, best ideas on how the different parts of the ecosystem could be pulled in to solve some of these problems. I think some of panelists have raised. I think we're still at this pretty much at the early stage of some of this discovery process. So look forward to ideas to solve the whole set of problem and that overall customer journey, if you would. Thank you.
Thank you, Alan. So for sure, right, we are in early days. I want to thank all the panelists for sharing their insights. I look forward to seeing how all of their projects develop and how CBDCs develop. And with that, I'll turn it back over to Sophia to close out the webinar. Thank you all.
Firstly, thank you so much to our speakers and to our moderator, Donna, for truly an excellent panel. I think we have it perfectly teed up for a third one on CBDCs. There's just so much to discuss. And to everyone who dialed in, we'll be sure to share resources and also our recording so you can reference this again. Thanks again, everyone, and we look forward to continuing to engage with you all. Have a good night or a good rest of your day.
Bye-bye. Thank you, Sophia.